When I started trading, I made so many unnecessary mistakes, chasing quick profits and thinking I could turn $100 into $10,000 overnight. But guys, here's the truth. Trading isn't about making money fast. It's about building the skills that can turn trading into a profession rather than a hobby and make you a lot of money in the long run. But more importantly, and this is what I think everyone is after, give you freedom of time and location. If I had to start over, here's exactly how I would do it to get to that point a lot faster. Instead of focusing on making money as a trader, start on focusing on progress first. It's not being spoken about enough in my opinion. Because at the end of the day, guys, many people see trading as a hobby. Many people see trading as something that can earn you money quickly. But that is not the truth. Trading is a profession. And in order to become a professional in something, you need to study first. You need to make progress first until you can start calling yourself an expert. You're not going to make a bunch of money by copying someone's signals. You're not going to be sitting on an island in Bali copying someone else's signals. You're not going to be profitable using someone's trading algorithm. At the end of the day, I believe that trading is a profession. And in order to become a professional, you need to start focusing on progress. Start refining your strategy. Start backtesting, forward testing, start educating yourself. You have to spend so many hours studying first, refining your strategy, building your strategy at the beginning days. And afterwards, you also have to become the person that deserves to become profitable, something that we'll speak about later on. But if you don't have a profitable trading system that over a longer period of time is going to be net profitable with solid risk management, with solid executions and solid triggers. And if you're not able to analyze a chart and understand the higher time frame context before you even start looking for triggers and executions, you're never ever going to become profitable. And in order to become profitable, you need that system first, both technical analysis wise, risk management wise, and it's going to be a long process that takes a lot of progress before you can actually start earning money. And the thing is as well, as soon as you stop focusing on making money, and this is maybe a little bit spiritual for some people, but this is how energy works in my opinion. Once you stop focusing on making money, but you start focusing on making progress and building a solid strategy and becoming the person who deserves to make money, money will flow. Money will come as if it's nothing. And it sounds weird, and it sounds spiritual, and it sounds woohoo, that kind of stuff. It's just the way that, in my opinion, the universe works. So, of course, we all started trading because we want to make money, and we want to have a lot of freedom, and we want to be able to go anywhere we want and make money still. But if you start focusing on progress, as an individual, but especially as a trader, so on your system, on your risk management, on your discipline, that kind of stuff, eventually, money is a natural consequence that will follow because you have the qualities, because you have the profession within you to make that kind of money. And it's going to be a natural consequence. Once you stop focusing on making money, but you start focusing on progress, money will follow. During my beginning days, guys, there were so many different tools that I wanted to study. So many different strategies that I wanted to study. But honestly, in my opinion, especially as a beginning trader, or if I would have to start all over again, I would come to the realization pretty quickly that there's only two things as a beginning trader or as a trader in general that you truly have to master and that you truly have to study. And in my opinion, those two components are market structure and liquidity. Yesterday, I executed a few beautiful longs on Bitcoin based off just market structure and liquidity. The first thing that we always have to do is determine the higher time frame trend. And what we can see is that the higher time frame trend and the market structure is obviously pointing towards the upside. Then we always move to the lower time frame to start looking at potential potential executions. Now, what I was looking at for Bitcoin was pretty interesting, because what we can see over here when I play the replay is that over here we got a move to the downside. Now, this move to the downside is what intrigued me, because we can see that over here we have a lot of liquidity resting to the upside, which is the all-time high and the second to highest high right over here. We have the weekly high that we formed on a Thursday. We know that weekly highs and weekly lows that are formed on Thursdays often get taken out on Fridays according to the statistics. But more importantly, looking at the market structure and the liquidity, what I was looking at over here is that we had this local sweep of liquidity over here. After that local sweep of liquidity, we knew that there was liquidity being engineered over here. We took out that liquidity. After taking out the liquidity, we got a strong push to the upside. That strong push to the upside gave us a valid break of structure right over here. How come that this was a valid break of structure? Because this was the high that brought us to a lower low over here compared to this high that brought us to that low. And therefore, it was a valid break of structure. Now we know that higher time frame market structure is pointing towards the upside. We have a lower time frame reversal structure. We have ourselves a draw on liquidity with the Thursday high over here. So we start looking at a potential execution. What we can see over here within this local range is once again market structure and liquidity combined, giving us a potential execution. Because we see my favorite continuation structure. We are building up liquidity by making a high, higher low, higher high, higher low, higher high. We know that this kind of structure is giving us low probability market structure breaks. Low probability break right there and another low probability break right there. These low probability breaks, what are they doing? I've taught you guys this many times. It is engineering liquidity beneath the low over here. And it is also engineering beneath the low over here. Plenty of liquidity being engineered that we then mitigate with an aggressive push to the downside. Now, if you don't understand the concept of market structure and how market structure can actually engineer liquidity, I am leaving a link to a very special video where I go over this concept in the description down below. So now we know that retail traders are looking at this push to the downside. And what are they looking at? They're looking at a market structure break to the downside over here. So what is retail doing? They're looking for shorts over here, targeting lower levels over here with their invalidation above this high. Or they are looking to short the pullback with the exact same invalidation. Retail traders don't understand the higher time frame context. That the higher time frame market structure is pointing towards the upside. That the higher time frame draw on liquidity is towards the upside over here as well. And then we saw a high probability reversal pattern over here. So instead of looking for shorts, you always want to look for longs, especially if you see a structure like this being developed on the chart. This is where you want to look for longs, targeting higher levels, and then you can play the continuation over here as well. So that is exactly what I started doing. I started waiting for Bitcoin to give me the confirmation that I can hop into a long position. And what we can then see is very interesting to me, because what we can see over here on the local time frame is a potential high probability reversal structure. By sweeping this high over here, price was engineering liquidity over here and also over here. So that means that we have a high probability local liquidity sweep due to this piece of price action over here. If we now can break structure back towards the upside, we have ourselves a valid long trigger to target higher levels. So afterwards, when I play the chart, I can see that Bitcoin indeed was getting that push towards the upside after a bit of waiting, right? And this is where I started becoming interested in longs for Bitcoin. Now, in order to execute a long, we need to get a valid entry trigger. So I was waiting for some more liquidity to be engineered. And guys, this is where the liquidity was being engineered on the chart for Bitcoin. If I play the replay like this, with this push towards the upside, we were putting in a fake and low probability break of structure. Many people long the breakout on Bitcoin over here because many people are very impatient. Where are they placing their stops? They are placing their stops exactly beneath the low over here. And that is exactly where I was looking to execute my long idea on Bitcoin with my invalidation over here and my target over here. So eventually the setup looked something like this, and when we play the replay, we can see that we got beautifully filled and that overnight Bitcoin hit a major take profit target. Now guys, this setup is based just of market structure and liquidity. Because in my opinion, alongside ranges and statistics, this is basically all you need. And if you're a beginning trader, start studying market structure and liquidity in order to become profitable a lot quicker. Block out all of the noise and all of the different strategies and tools that people are trying to educate you on. And first start with only mastering liquidity and market structure. Make sure to become the person who deserves to be profitable. It is something, guys, especially as a beginning trader, especially when you're on that journey to build your own strategy. All that you basically want to be doing, at least what I was doing, because I was completely obsessed with the charts at the beginning, is just sit behind your screen, watch YouTube videos, watch courses, buy courses, join communities, watch Twitter, watch Instagram, watch shorts. Like everything in my life was surrounded around trading and technical analysis and building my strategy and making money. I was trying to make the progress that we were just speaking about. But the thing that I forgot is that I stopped focusing on my personal life, and I stopped focusing on my personal development as a person, as an individual. Because I truly believe that in order to make a lot of money, in order to make progress as a trader or whatever you're doing in life, as an entrepreneur, or you first have to become the person who deserves to make a lot of money, who deserves to become a profitable trader, who deserves to become a successful entrepreneur. So that means working out, that means developing yourself spiritually, physically, mentally. There's going to be a lot of struggles that come with trading, and it's going to take a lot of discipline, and it's going to take a lot of consistency. And in my opinion, if you're not a disciplined person in your real life, in your daily life, if you're not a consistent person in your real life, in your daily life, if you're not able to deal with a lot of struggles and hurdles in your real life and in your daily life, how do you expect to become a disciplined, consistent trader who can deal with the struggles that come with trading and investing? It doesn't make any sense. Because if you're not that person in your real life and daily life, how do you expect to be that person within your trading career? It doesn't make any sense. So as soon as I stopped focusing on making money and I started focusing on progress, not only as a trader, what we just spoke about, but also as an individual, for some reason, and now in hindsight it makes a lot of sense, for some reason I started making so much progress, and within no time I made a progress in maybe 1 or 2 months that before took me 1.5 years. It just clicked. And in my opinion, one of the reasons why it clicked is that I stopped focusing on making money and I started focusing on becoming the person who deserves to be a profitable trader. At some point, I started earning a lot of money with trading and investing and everything surrounding it. What did I do? I started partying a lot. I started going out a lot. I started spending a lot of money. And what I forgot at that time is that slowly but surely, I wasn't the individual anymore who deserved to be profitable. So what happened? Obviously, it had to do with the market circumstances back at the time as well. It was right before and during the FTX crash. And I think many community members remember, and many of my friends and family remember as well. But at that time, my trading results, they went down drastically. I was having losing months, I was having break-even months, and a few winning months. And then afterwards, at some point, I think it was now around 1.5 years ago, maybe a year ago, I can't really remember, I started doing the 75 hard challenge. Many of you guys are familiar with it. Many of you guys already followed me back then when I started doing it. And what it basically is that you start working on yourself as an individual. So you had to work out twice a day, do meditation, that kind of stuff. So what basically happened, without me realizing it, is that I became the individual again who deserved to be a profitable trader. And I swear to God, my trading results went through the roof. And ever since then, I force myself to work out 6 times a week. There are no weeks anymore where I don't work out at least 6 times. I force myself to meditate 3 times a week. I know myself, I can't meditate every single day, but I force myself to do it 3 times a week. Why? Because I know that it helps me to become the individual that deserves to be a profitable trader and investor. And it works with everything like this in life. Do not forget that when things go well or when things go south, that you first have to go back to yourself, look within you, look inside you, and see what you can improve upon in order to become the individual that deserves to be successful. One of the most common made mistakes by beginning trader or unprofitable traders in general is that people flip-flop strategy and that people flip-flop trading assets every single day or every single week. And guys, this makes a lot of sense because if you're not profitable, you're always going to seek for reasons that you're not profitable yet. So you're going to blame the strategy, you're going to blame the asset that you're trading. But guys, trust me, once you find yourself a profitable strategy, that strategy honestly works on every single asset in the world. I'm choosing to trade crypto, but I've traded Forex before, and I'm a 99% sure that my strategy also works on trading futures. At the end of the day, you cannot blame the asset that you're trading, that you're not profitable yet. What you should be doing instead is refine your strategy, refine your edge, make sure that you become the person that deserves to be profitable, and focus on one asset and one asset only until you master that asset, whether that's crypto, Forex, commodities, whatsoever. I really and honestly couldn't care less. And once you master one asset, for example, Bitcoin or Euro against the dollar, then you can slowly but surely start to expand towards more asset in that class. So besides Bitcoin, I'm now also trading Ethereum. I love to trade Chainlink. I love to trade Solana. But I first started with mastering my strategy and executing that strategy on one asset and one asset only. Right now, I've showed you guys a beautiful example of a Bitcoin long position that I executed yesterday based off market structure and liquidity. But right now, I'm also going to give you guys a beautiful example of a short position, not on a crypto asset, no, on a Forex asset with the exact same strategy, the exact same triggers, the exact same execution, and eventually the exact same result. So what we are looking at over here is the Euro chart. Once again, understand the higher time frame context. We are in a major downtrend. Start learning market structure, start learning trending environments. So we know that the only thing that we want to look for is potential short positions on Euro. And we can also see that the higher time frame context is that we only had a tiny sweep of this low over here. We know that high time frame liquidity pools like this, they need more than a tiny little sweep in order to get fully mitigated. So we go to the lower time frame to start looking at potential executions. And what I can see over here when I play the lower time frame chart is once again something very, very interesting to me, because we are seeing that we are having a slow grind to the downside. Right? We're making a low, lower high, lower low, lower high, lower low. What is this doing? It is indeed engineering liquidity above this high over here and engineering liquidity above the highs over here. So what do we want to wait for? We want to wait for our favorite continuation structure by sweeping the highs, trading back beneath the low, playing the lower high if we get a valid execution trigger, and then start targeting lower lows. We can see that indeed, after a bit of waiting, Euro traded back above those highs, mitigated the liquidity that was resting above those highs. We engineered that liquidity by getting these fake break of structures to the downside, and then Euro broke structure to the downside over here and started trading back beneath this low. So now all that we have to wait for is for price to engineer liquidity either beneath this little breaker block over here or either beneath this little breaker block over here, and we need to have a clear drawn liquidity to the downside to execute our trading idea. And so this is exactly what we want to see. We have this breaker block over here. Beneath that breaker, we have a valid inducement that was created over here on the Euro chart. How is this a valid inducement? Because after putting in this high in that front run of the breaker block, we get a strong push to the downside, and that strong push to the downside is breaking through some lows over here. So what happens is that people break down shorter price over here, or they pull back shorter price over here with indeed their stop loss resting above this high, making that high a valid inducement. By putting in these higher lows over here, we're also having a beautiful draw on liquidity to the downside. So we have ourselves a valid draw on liquidity, a valid inducement, a valid trigger, so we can start executing a short idea right over here on the price of euro with as a target new lower lows and targeting the draw on liquidity towards the downside. So if we play the chart, we can see that euro beautifully got filled and afterwards started finding its way towards the downside. You can play back this video to the trading idea that I explained on Bitcoin. Yes, it was a long position instead of a short position, but the triggers, the execution was exactly the same as this euro trade. Exact same strategy and the exact same result, showing to you that it's not the asset that you should blame that you're not profitable yet, but instead it's your trading strategy that is not good enough yet in order to call yourself a profitable trader. So many things that we discussed in today's video that I wish I knew before I started with trading. But I'm happy that I made those mistakes. I'm extremely grateful that I went through those struggles, because nowadays I can make videos like this where I hope that I can educate you guys, where I hope that I can help you guys not make the same mistakes over and over and over again that I made when I started out with trading until I became the profitable trader. And I hope that you guys are watching this video and that you feel the urge to learn even more. If you're watching up until this point, you probably have that urge. You probably have that fire within you that you truly want to become a profitable trader. Which brings me to the next topic that you should study. It's something that we discussed in today's video as well. It's market structure and liquidity. In the description down below, but also right here, you can now move towards that video where I do a deep dive into market structure and how market structure engineers liquidity. I've told you guys, master market structure, master liquidity, and you are well on your way towards a profitable trader.